Are you new to real estate, struggling in real estate, wholesaler, cash buyer, brand new, and you're not sure which way is up, and you're looking for better ways to close more deals or even your first deal? You're in the right place. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze property and craft strong offers. This is the weekly deal analysis. Let's get into the show. Hey, real quick, before we get into this week's show, if you haven't done so, please hit that like button because I know you're going to find some value in it. And if you know somebody who else might find value in this, share it with them. Let's get into the show. What in the Garth Brooks? We are going down to Baton Rouge this week. 17282 Lake Park Avenue in Baton Rouge, Louisiana, 70816. They are asking $220,000. It is a three-bedroom, two-bath, 1,466 square feet, and they have been on the market for 448 days. So that's quite a while if you can do some basic math there. So let's look through these pictures and see what's wrong with this place because there's no reason it should be on the market still. Cute little front porch, nice trees, carport, tile, family room, kitchen space. Doesn't look bad. I mean, it's very plain and bland, but overall, it looks pretty darn good. Hmm. All right, let's see what else this thing's telling us here. All right, property details. 2-1, cover landscaping. Where's landscaping? All right, so we don't know any of this stuff. Not telling us anything updated about the property. Value-wise, so 201, Core Logic 214, Quantarium 213. We're not that far off either of those numbers, so I don't know if that's the right fit there. Well, and if you just look across here, 183, 176, 190, 92, 198, 91, 90, 73, 216. This property is the oddball out. I think these numbers are a whole lot more in line. So they listed December 30th of 2024, and they had one price reduction in February of 25. And at the time of this recording, it is the end of March 2026. Property taxes seem reasonable, not too crazy. See what else they're telling us here. Anything pending? Nothing there. Nothing there. What about rentals? Anything? Apartment. Where's a house? Single family house, 21 to 3 or 4 bedroom. Not sure how that works out, but all right. I think we figured out everything we can on here. So now we're going to jump over to the Invest Nest and analyze the cash deal. So I've got it pulled up here on the Invest Nest. I love this site. I use it to analyze every single deal that I do. And it is super user friendly. It is easy on the pocket. If you want to try it out, I will have links below. You can get your first week for free and 50% off of your first month. One of the coolest things that they offer that is included in their monthly price is skip tracing. If I push this little button here, I can get the seller's contact information and go directly to the seller. But let's finish looking through this thing and see what we can find. See if it'll tell us what they bought it for. In 2015, they bought it for $100,000. Good for them. And any finance details here? Doesn't look like there's any mortgage payment on it. Nope. All right, let's break some numbers down. So we're just going to call this the property address. And our purchase price, I want to jump back over here for a second. And it didn't show us anything pending there, but there is another house over here right next to it that is pending at 200. Let's look through these pictures and see what they, oh, this one's much nicer. Everything's not your hospital white. A little bit of color to it, but nothing, it's really nothing over the top. They got LVP versus tile, garage. All right, so based off of this, I think our ARV or after repair value on our subject property, I don't think it's going to be over at 200 with some repairs. I can kind of see, but I think we're just going to leave it plain and we're not going to plan on any repairs because overall I think it is in good condition. Probably needs a paint job, but we're going to exclude that for today. So as it currently sits, I think we're going to put a number of $190,000 on this as our ARV or after repair value. So we're thinking 190. Now, if you follow the show, you know that I do 70% of ARV minus repairs. We already said we're not going to worry about any repairs in this analysis. So it's just going to be 190 times 70%. Gives us an offer price of 133,000. We are going to offer to pay both sides of closing, the buyer and the seller, to help make our offer more enticing for that seller to take. Our lender is going to charge us 2 points, whether we're using a DSCR lender, which is a debt service coverage ratio lender, or just a regular traditional lender that's doing an investor loan. But that's basically how the lender gets paid. So we're putting 25% down. We want a 30-year term. And I think rates, we might be able to sneak with a 6.75. All right, our rental numbers. We really didn't get anything from those other two sites. So first, we're going to check HUD or Section 8. So in this area, they are saying they will pay up to 1511. And we didn't get a number from anything else previously. So 1511 is our base price. And I also like Rentometer. Again, links for all of this stuff will be down in the show notes. But an average they're saying is 1870, median is 1900, bottom and top end. So I think we're just going to stick with this bottom end number, but we'll fluff it just a hair to 1650. So if we're saying 1650 and 15 here, we might be better off not having a Section 8 tenant in this particular property. So we're going to say 1650 for our rent. Property taxes, that's the same as Realtor was telling us. Insurance, I like to factor $125 a month or $1,500 a year. Management, 10%. That's pretty standard across nationwide. Our tenant's going to be paying all of the utilities, and we do have a $10 a month HOA. And my favorite part, the war chest or reserve fund. That is 5% for vacancy, 5% for repairs and maintenance, and capital expenditures. That's going to be like your big ticket stuff like your siding, your roof, your furnace, HVAC, things like that. So we put 15% off the top every single month into a separate account. Why? Because this is real estate. It's not a matter of if something's going to go wrong. It is a matter of when something goes wrong. Plan on a 2% appreciation rate on the property value. And I generally like to increase my rents 2.5% per year. And we are real estate investors. We don't pay full commissions. Let's see what these numbers look like. You were waiting to see if it cash flowed. I know. I got to ask one more time. If you haven't done so already, hit that like button for me and share it with somebody who else might find some value out of this. Now, let's see if this thing cash flows. Boom, we got cash flow. So $253.37 per month. Sorry, dyslexia. That's going to cost us 40,500 out of our pocket. Our down payment is going to be 33. Our mortgage payment, or that PITI, is 66, almost 646.98. Sorry, numbers are not coming out today. Cap rate is more of a multifamily thing, but that hits a good solid number. DSCR, which we discussed earlier, is a 1.39. Lenders like to see at least a 1.1 to 1.2. The higher this number is, generally the better rate you're going to get. Cash on cash, 7.5. And your ROI, or return on investment, is 16.5. If you follow the 1% rule, this actually does work. And let's see where they break all our numbers down. Another thing that the InvestNest does is breaks all of these figures out, makes it super easy to see where every dollar goes. Another thing I love about this is not only does it tell me my cash on cash return over the years, it tells me what my cash flow is, and even more importantly, this chart right here tells me that within 4 years, I can have all of my original capital back. I like that deal. Now we're going to jump over and do my favorite part, analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. Link will also be below in the show notes. So we're saying our ARV, or after repair value, is 190,000. This is my creative calculator. You can get it off my website, christhompsonteam.com, and the link will also be down in the show notes. ARV, or after repair value, we said was 190. And for our purchase price, we are going to say, hey, Mr. and Mrs. Seller, I will pay you, the cash price I think was like 133. I will pay you 180. And that's too high. I'll give you 170. And I will pay you a 4% interest rate. So over the time, generally, they will get that 190 to 200 price because of that interest rate. Now to factor our PITI, or principal, interest, taxes, and insurance, or our mortgage payment, we're going to jump over to bank rate. Our contract price we think is 170. I only like to offer 5% down. Our interest rate we said was 4 points, and our zip code 70816. And homeowners is already 125. Property tax is 20. We'll round up just a hair, 203. All right, let's see. All right, $1,099. And that covers our principal, interest, taxes, and insurance, or our mortgage payment. Ooh, hold that thought. We got to add in the HOA. I forgot to do that. And we add in our $10 HOA fee. Now we're at 1109, and that covers everything. So 1109 is our payment. And we were saying 1650 for our rents. Not great, not the best, but not the worst either. So 128.50 net per month. Let's finish going through here. Cash to the seller was 8,500. Agent commissions, they're not doing anything. Let's see if we can throw $500 for them to go away. We're not working with a wholesaler, so there is no assignment fee. Closing cost is that same 4%. Cost of renos, we said we're not doing anything. It probably does need something. 2 months of holding is just 2 months of this mortgage payment here, and a good TC or transaction coordinator will cost you about 1,500 bucks. So all out of pocket, you're just over $20,000, and that's a 13-year ROI. What if we cut this rate down to 3%? And make a little bit better cash flow. 1019, crazy, but 1019, but it made it a little bit better. So just by reducing that by 1 point, it made it a much better deal. So 218.50 in your pocket each month. And if you're local, you don't hire management out. So there's an extra 165 into your pocket, and your ROI just shrank down from 13 to 7.5 years. Pretty decent cash deal, excuse me, really good cash deal, and pretty good creative deal. What did you think about Lake Park in Baton Rouge, Louisiana? Are you a cash buyer or are you going creative? I'd love to hear your feedback in the comments down below. That is going to do it here for us on this episode of the Weekly Deal Analysis in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We will see you next week.